On behalf of Crosscheck Media and BizTalk Today TV, welcome everyone to Wayve Wire. I am your host, Todd Schoenberger. And joining me as they do every week are the executives from Wayve Capital. I have Joe Besecker, he is the CEO, and Rhys Williams, the CIO. Gentlemen, welcome to the program. We have to start talking about the market sell-off today. And we had the breaking news that actually broke late last night, and we heard it official today, and that is the new Fed chairman, Kevin Warsh. Now, Rhys, is this sell-off a result of the Warsh pick, or is there something else that might be leading to the rapid decline of markets today?
Yeah, I don't know why it would be a surprise. I think in the prediction markets, he was like 70% in recent days. Reader had a bit of a push last week, but it kind of looked like Warsh. I do think, Warsh is an interesting guy because historically he's kind of a hard money Hoover Institute, very traditional Fed chair. Wasn't so excited about all the QEs. I think he supported the first QE, but not the other ones. So my point is, theoretically, the market should be thinking this is a bit of a hard money guy. On the other hand, he campaigned for the job by telling everybody how much he was going to lower interest rates. Even though the rest of the markets are saying we don't need to lower interest rates, and most of the people on the Fed voting governors don't think that you need to lower interest rates. So I think you got a bit of a push and pull, but clearly the dollar is rebounding, which would suggest that that's a sort of a confidence in the Fed chair. Gold and silver are plummeting. We talked about that last week. That's also a bit of a confidence in the Fed chair. So I think the overall that he's a good pick. And I think the markets will be more or less sanguine with him.
Okay, so Joe, what do you think? I mean, you have your finger on the pulse of politics. Tell the audience, do you think this is the right pick? And is this sell-off just a knee-jerk reaction?
I think we were due for a sell-off. And I think any reason to sell off, look at some of the individual stocks Rhys has talked about before. They'll have great results, but we've had some of these moves. We talked about silver last week. Smart Rhys sold. I don't know where he sold, but he sold that in the portfolio. Markets go up, markets go down. I think this is a good, decent pick. I actually didn't mind any of them. But then again, as I've said before, I'm not really. I think the mistake that the current Fed chair made several years ago has been gone, and since then, I think they've done all right. But we know what the Trump administration wants, and I can sure as heck guarantee you that Kevin Warsh has given some wink and a nod that he's going to at least push for lower rates, and I think we will get them. And I think when we get them, that will supply a little more oxygen to the market. Yet this move that we've had and some of these moves we have, trees don't grow to the sky, as they say. And therefore, I think you're going to be in a period, once again, every week, I sound like Johnny One-Tomb, of transition. And once we get through this transition, I think we have a pretty good runway for retail and institutional investors.
Yeah, well, Joe, let me ask you this, though. If you are Jerome Powell, your term as chairman ends in May, a few months from now. You have this ongoing criminal investigation by the DOJ, a lot of pressure from the White House, but you have the option to stay on as governor for 2 more years. If you're Jerome Powell, are you going to do that?
I wouldn't. Why take the beating? He can make a gazillion dollars out speaking. He's not a dynamic speaker, but I would, if he were somewhere and he wasn't on the Fed anymore, I would go listen to him. People will pay for him to do that. Now, I think he may feel compelled to be a voice of, in his view, reason on the there. I don't know what the opportunity is. I wouldn't do it, but if he wants to do it, I'm fine with it as well.
Well, Rhys, we talked about silver selling off, gold, copper. All of the metals are just getting crushed. They're getting destroyed today. They're taking away the manhood of Wall Street traders. Is this just a knee-jerk reaction? I mean, is this a great time to get back in, or would you just stay away from the metals at this time?
Well, I looked at the SLV, which is trading at about $84, $85. The 50-day moving average is 67.
Yeah,
So
yeah.
to let you know how much it's gone up in the past month, it's really been to Joe's point last week, a parabolic move. So I think sell-offs like this are normal and parabolic kind of charts. And like I said, I wouldn't read too much into it. I do think you had an unusual year last year in that you had gold and silver and copper doing very well, and the S&P 500 doing really well. And maybe they become more of a
And
hedge.
Bitcoin not doing as well.
Right. And I think that was part of it also, is the money left Bitcoin and went into gold and silver because that was more of a hedge. That was acting better. So I do think that what's going to happen here is potentially, if gold and silver win, the S&P 500 doesn't, and vice versa, that they will be more of a natural hedge, and people will buy them when they feel bad about the US dollar, bad about their attitude towards, the US government, and maybe bad about earnings.
Well, my pizza bet, which you guys know I like to do, my pizza bet is that next year at this time, the right way to put your chips was on the market and not on commodities, common. Uh, and as I said, and I quote this all the time, Warren Buffett, gold and silver just sit there and look at you. With AI and the type of really bright people that are out there, I like investing in people because people will make me money.
Yeah, I like that approach. That's great advice then. So, well, let's turn the page because this was also a very heavy week for earnings, especially tech earnings. Rhys, we saw Apple come out yesterday. The numbers actually did well. However, Tim Cook came out and started talking about these memory chips. Can you explain to the audience why this is a negative for Apple stock and Apple shareholders, especially when it comes to these memory chips, and how it could also impact AI?
Sure. Well, right now you have a shortage of memory chips, and they're raising prices a lot. And by a lot, you're talking about like 400 and 500%. Now, Apple is not paying the spot price. Apple gets a better deal because of their buying power and because they'll give a long-term contract. And I think obviously they said this past quarter, December, really didn't get affected. And the March quarter is going to be very marginally affected. And they put that in the gross margin guidance, which is 48 to 49%. So I think for the next couple quarters, it's fine. If memory prices continue to go up exponentially or parabolically like they have, it's going to be a problem for Apple in the second half of the year. My bet is after this period of rapid price adjustment, you're gonna basically have some demand destruction, and you're not going to have this continued, up 400% every month. So
No,
my guess is this is
I
probably
agree.
going to be a buying opportunity for a stock like Apple, because it's not about the next quarter. I think people are worried about the second half of the year when they don't have as many memory hedges.
It's really hard to gauge with when you have this unbelievable growth when the music will stop. I predict, and I don't know exactly when, but memory chips and the business will get a small case of Alzheimer's. All right. And the memory is not going to be able. I think when you have all these smart people and all this new technology figuring out how to buy, when to buy, yes, I hear everyone and I've talked to everyone, and you talked more than me. You've traveled internationally and talked to these makers, but there will be a point where it gets a little crazy. So I would be there still, but I would have an itchy trigger finger on some of these. Just that's just me.
Yeah, I mean,
Okay.
I still think you want to be in these commodity DRAM makers, though, like a Micron, because even though it's
I agree.
it's 6 times earnings. I mean,
I agree. Yeah,
it's
exactly.
really in a dynamic spot, and in fact, because of the long lead times, there really can't be much capacity until 2027. So
Right.
you're in this really great sweet spot for the commodity DRAM manufacturers. I do think Apple will get the best contract, though, compared to everybody else.
No, and
Rhys,
Nvidia.
Rhys,
Well,
what are
Nvidia
your
doesn't
thoughts?
doesn't use them.
Rhys, what are your thoughts on the software side? Looking at Microsoft, the big sell-off that we saw yesterday, would that have been a buying opportunity?
Well, I have to admit, it's a very weird world when you have a company at that size that grew revenues at 23%, that grew Azure at 38%, and the market wanted 39% to go down 10%. I mean, what would Coca-Cola give for a 8% revenue growth, let alone a 23% revenue growth? So I think people are really too just micro-focused on this whole, we hate software because AI is going to kill software. And everything, by the way, it wasn't just Microsoft, ServiceNow had an excellent report and went down hard. And they have an agentic AI story and a CEO that everybody loves in Bill McDermott. So I just think right now we're in this period in the market where we really like chips because there's a lot of dynamic earning surprises coming on, especially on the commodity side. You saw SanDisk today, Micron's acting well, Lumentum, Coherent, all these companies that are sort of more commodity oriented and playing this AI infrastructure build out, they're doing great. And everything else in tech and software is really just goes down every day. So
And
I think it was overdone.
I'll stay with what I say. And I had multiple conversations over the last 2 with software companies and software analysts. And of course, they're all looking at their shoes and despondent. They can't believe what's happening. So I'm going to go into a sector of software and stay in a sector of software and be able to participate in names in this area that typically don't give you that opportunity. And I don't think there's, as I've said a bazillion times, I don't believe that the space for security and cybersecurity is going to implode. And it's being dragged down with the rest of the software space. So for people out there, if you just want to buy a security ETF, but I do believe that there are certain cybersecurity names. I believe the gold standard in that space is Palo Alto, and you rarely get a chance. From the day Palo Alto came out, it was expensive. And on a relative basis, I guess it's still expensive, but not compared to how high it got. So names like that and the work that you can do in that, and it's not all the big, but it's rare that you get a chance to buy a gold standard company at this kind of discount. So I look, we need software. AI is not going to replace software overnight. Therefore, you need to start to look in that space if you're asking me.
I think you want to be underweight, though, my personal opinion,
Yeah.
because there's no sign that it's bottoming. And the problem you face is, hey, maybe they haven't seen it yet, but next quarter they're going to get wiped out by these AI LLMs. And so you have
one of the other things is if you talk to the cybersecurity companies, and Todd, you should maybe look at this as a theme, is this administration. They used to have a lot of the European and even countries other than the United States were using our cybersecurity companies. That's because they trusted us. At this point, that trust has waned dramatically, and they are starting to look for other solutions outside of United States, Israel, and whatever. So that is, you talk to these cyber companies, it's a real problem. And until that balances out, transition again, until that balances out, I can understand why there's some trepidation. But all in all, if you pull back a little bit, these names, I think, will perform well. Continue 5, 6, 7 years back and look at these charts. But yeah, there's some problems out there. But smart people, smart solutions, and I think some of these names, and I would urge listeners to do some of the work on their own. I gave Palo Alto as a name, but there are others that definitely are worthy of looking at. So I just think that's a space where when they put it on sale, I'm always there to kind of look.
Okay. Well, let's turn the page now to stock market performance for the month of January. Today is the last trading day, and the S&P is just, up 1% going as of right now. Rhys, is the sell-off that we saw yesterday, today, is all of this correlated to end of month rebalancing, or is there more to the story? Because if this is what we're going to expect, this type of volatility with only a 1% gain, I say it's not worth it. But what do you think?
Well, if you put 1% and times it by 12, that's a 12% year. I think most people would take 12%. I think people have gotten super spoiled with returns in recent years. So
you're right.
And you're going to have volatility and especially because once again, there's a lot of algo trading out there, a lot. I mean, way more than actually people like Joe and I buying and selling any individual stock. And so the market is really controlled by the algos, not by individual people. And then to some extent by retail. I mean, retail is more important than institutional almost in setting prices now. So I think we're just stuck in that there's going to be way more volatility than there was 20 years ago.
In this short
Hopefully
term,
it's mostly upside volatility.
yeah, in this short term, exactly. But I still think the overall market of quality names is up and to the right. And as an asset, to me, over an extended period of time, the equity market is where people should have, especially young people, should have their long-term money. And the democratization of ways for the individual investor to get in, get information. They have shows like this, wonderful shows like this, and the platform that Todd does that provides that people can educate themselves and look for opportunities. Jim Cramer, he didn't coin it, but there's always a bull market somewhere. Okay, I agree with that. And that means you got to spend a little time, like Peter Lynch used to say, spend a little time, do the work, as opposed to just listening to somebody down the street.
Yeah, I love that. I love the plug too, Joe. I'll send you $20 for that. That's awesome.
25,
Joe, going
25. I'm the market is pulled back. I need the extra $5.
So going into February, should we remain bullish, or do you think now is a great time to pause and wait and see what's going to take place with leadership with the Fed?
Well, I personally think it's going to be sort of on a name-by-name basis. And if you look at it so far, what's happened, if a company, even if a company was expected to do well, but did even better than expected, you got rewarded. I mean, look at where SanDisk is trading today. So there are, I think you're getting rewarded for positive fundamentals. And similarly, if anything is wrong, you're really getting pounded. So I think you're going to expect more of the same in February. If you can be in the right companies that are going to be beating and raising, I think you're going to do okay. And if anybody misses for any reason, that's going to be a real problem.
Okay. Joe, we're going to leave it at this, but I got to ask you, you got a big race, a horse race tomorrow. You want to give a little mention about it?
Well, I'm very fortunate. I believe with any business that I get into, the most important thing that you can do is research. And as I've been preaching it here, I think people, if they do there. So I have taken the process that I have lived my life on, whether in the investment market or in the equine market, and it's about research. So I was able to find this horse. The horse, by the way, I don't know if you saw it, Todd. As a baby, they paid him over $1 million for this horse.
Oh, I did not see that.
And my little group were able to claim it, as they call, for $40,000. Now, you have to run these horses so we ran it under what we claimed it for, and it won. So we've got a lot of our money back. So we're taking a shot tomorrow at Santa Anita in the 4th race. It's called the San Pasquale. People buy millions of dollars of horses or are in the business for years and years and years. And the group of guys that I bought this with are spoiled because they're in a grade 2 stake tomorrow at Santa Anita. The name of the horse is Ghazali. And there's only 6 horses in the race. A lot of these other horses are going to Dubai and whatever. So there's this unique opportunity like we see in the market sometimes, the inefficiencies. So we're trying to take advantage of an inefficient market. There's only 6 horses. We are the longest shot, but and there's a lot of speed. So if we can kind of get a good position and then at the end use our closing kick, am I drinking my own Kool-Aid enough to think that we're going to win? Maybe not. Maybe, but maybe not. It's a horse race. But I sure know with that kind of purse, if you finish 2nd or 3rd, those are pretty nice purses as well. And it's something for your listeners to have fun and watch. And I know my partners are excited. I know that I'm excited. And unfortunately, I'm not going to be able to be there, but I'll be watching.
Well, the 4th race tomorrow, it's a stakes race, ladies and gentlemen. You definitely want to watch it. And it also gives us a tune-up as we get further into horse racing season and we approach the all-important Kentucky Derby. So a lot going on there. But this is an 8-year-old horse, so it will not be running in the Kentucky Derby.
No,
tomorrow is the day. 4th race at Santa Anita.
Yeah, well, seasoned veteran that change trainers from when we took it to what I think is one of the best trainers in the country, Doug O'Neill. And it's taken him a while to get it's just like in football, baseball, it's coaching. And I think the horses, I think we have a shot tomorrow to at least hit the board.
Well, we are definitely bullish on that, and we will have an update on BTT on all the social media networks. So you definitely want to check it out and tune in tomorrow. So fourth race, Santa Anita. And I got to say, gentlemen, this was fantastic. A wonderful Wayve Wire, our best one yet, actually, as we close out the month of January. Can't wait for next week and can't wait to talk to both of you and as we move further along into the month. Coming up on Monday on the Money Path at 1 o'clock live, we have Ryan Dietrich from the Carson Group is going to be giving you the breakdown of what you can expect for the month of February. You will not want to miss that. So on behalf of Joe Besecker and Rhys Williams, I am Todd Schoenberger. Thank you once again for joining us on Wayve Wire. Have a wonderful weekend. We'll catch you next time. Take care.
Thank you, Todd.
Access real-time data and intelligent analytics exactly when you need them. Get the right data at the right time. Learn more at quotemedia.com.
There's more happening behind the headlines, and you deserve the full story. At Biz Talk Today TV, we break down investing, government moves, entertainment business, and even sports gambling, all in one place. Real conversations, smart insights, content that helps you think smarter and stay ahead. Thousands are tuning in. Don't miss what's next. Subscribe now to Biz Talk Today TV on YouTube and join the conversation shaping the future.